talking about are gold and Bitcoin. Right now, gold is by far the choice.
Alden's core thesis is that the ongoing debasement of fiat currencies, especially the US dollar, is not a future event, but a persistent and accelerating trend. She points to the poor performance of bonds over the last 5 years as concrete evidence. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
When it comes in degrees, I would say over the past 5 years, it's already been a tangible concern because I would say bonds have already been a terrible store of value, and pretty much any other asset, including gold and other things, is a much better store of value. That's something that I've been arguing, and then to Dalia's credit, that's something he's been arguing, 5+ years ago as well. And so it's part of it is it's not just theoretical future things that can happen. This is already in a 5-year long-term investment time horizon, if not longer, has already had tangible impacts. Going forward, I think we'll see similar impacts, less extreme than some of those years, but still kind of trending the same way. Now, there could be punctuated by periods of mini crises. An example is the 2022 UK gilt crisis, for example, where there's more of a sudden shock to how things happen. So, for example, if you do get a Fed that is viewed as being more kind of directly politicized than the Fed's already has been, that can spook confidence in the bond market in a similar way that what happened to the UK gilt market. I try not to invest around specific crises because they could happen in 2026, they could happen in 2028, they could happen in 2030. But I do think that over this time frame already laid out, so as we finish the 2020s and then go deeper into the 2030s, I think we're going to be in this period of kind of structurally higher deficits, ongoing debasement, and I think periodically in that time you'll have these shocks. It could be that some major country decides to sharply reduce its U.S. bonds and hold other assets. It could be kind of something war related. It could just be major kind of loss of confidence in treasuries, which I still don't think we have seen despite their poor performance. There are still many people arguing for disinflation, many people arguing for kind of correctly pointing out that equities are very expensive, and so some of them will want to own cash and bonds, which is somewhat sensible. But as long as there's this kind of ongoing confidence, it supports itself. In addition, one thing to keep in mind is there's like 18 trillion worth of dollar-denominated debt held offshore, and that's mostly not owed to the U.S. That's mostly owed to other countries. Like some country in Latin America will owe debt denominated in dollars to China, and some entity in China will own dollar-denominated debt to some entity in Europe, for example. And this kind of intertwined Eurodollar system, this debt system, that all represents inflexible demand for dollars. And so you can have a pretty significant dollar sell-off. You could have a dollar index of 90 or 80, and yet you still have inbuilt demand for dollars to service existing debts, which takes time to shift over to other ledgers. So I generally expect that these things will take longer than people think. When people ask me when does debt matter, when does the crisis happen, I would say in the past 5 years it's already mattered, and that it will continue to matter. But my base case would not be as explosive as some people might suggest, but instead we'll probably be talking about this 5 years from now, and there will have been more developments and more pain in the long-term bond and currency markets. But we'll probably still be using dollars for our purchases if we're in an area where that's normal. One is I think that the Shanghai Cooperation Organization and BRICS, while they are relevant, I don't really expect a major currency that competes with the US dollar per se, like a shared currency. I think we already seen in Europe the troubles with a shared currency, like a shared monetary union without a shared fiscal union. So I think instead we'll see like increased bilateral trade and non-dollar settlement. So we basically will see increasing examples of Russia selling arms to India outside the dollar system, or China buying commodities from Brazil in their own currency, for example. And I think that'll be a gradual shift where then these countries have to hold less dollars because they don't need as much dollars to buy commodities or to potentially service debts. In addition, you could see some existing dollar debts gradually shift over to other ledgers, like Chinese currency. So you kind of pay off one, and then you owe the entity in the other currency, and you see this gradual unwinding of the network effect of the dollar. I think that'll go well into the 2030s, and we'll reassess from there. Um, One thing I kind of point out sometimes is that I go to Egypt every year. We had 38% inflation, and we were still using the Egyptian pound. So people often have these like extreme scenarios for what's going to happen in the U.S. in 1 or 2 years, and it's like that's
Hmm.
all that's happening in many places in the world, and people network effects and government enforcement are kind of a lot more resilient than people think. But that doesn't mean they don't break over time. So I generally expect ongoing structural dollar debasement uh, well into the 2030s. It'll have been good to own. So it's not like saying that no problems happen till then. Just like how problems have happened over the past 5 years, but there's no been like one single crisis about it. It's just been this ongoing debasement with little mini crises here and there. I think that'll continue for 5, 10 years, and every year we get more data on what's happening. So I'm sure we'll have more points later, but I think that basically a lot of this will go on longer than people think, even as debasement is happening.
Instead, she anticipates a gradual shift toward a multipolar world with increased bilateral trade and non-dollar settlements. We are already seeing this with countries like Russia and India, or China and Brazil, conducting trade outside the dollar system.
First part of the discussion touched on that, which is gold flipped the dollar for the first time in a very long time as the biggest reserve holding of central banks. So that's like a first start, and it's still smaller than it used to be. We still are primarily, countries are holding dollar and other currencies collectively are bigger than gold. But now gold is kind of both from tonnage and from price appreciation reasserted itself kind of, back into the fray. I expect that trend to continue over the next 5, 10 plus years. Bitcoin is about 1/10 of the size of the gold market. So it has more growing to do before it's interesting to kind of non-outlier sovereigns. So far we've seen El Salvador, Kingdom of Bhutan, UAE. They've shown some interest. Countries like that have shown some interest in Bitcoin at the sovereign level and have generally been rewarded for it. It's generally not big and liquid enough to be kind of interested to the larger countries. As Bitcoin gets bigger, I think it's also potentially in the conversation for that, and that you can see that that's part of the multipolar set of assets that entities can hold. But basically, the really two big supranational currencies I think we're talking about are gold and Bitcoin. Right now, gold is by far the choice. The interesting thing about Bitcoin is it also settles some of their concerns around payments. So gold is obviously it's a great store of value. It's harder to actually send. Generally, you use a chain of credit to do it. It's hard to actually send tonnage around. It's expensive. For example, Germany's repatriation of its gold took many, many years. Even though it came in faster than they expected, it still took years, and it cost millions of dollars to do. Whereas Bitcoin settlements, you can send $1 billion Bitcoin settlement and wait for multiple blocks to confirm on the blockchain and send it in like half an hour or an hour. So that is kind of this open source non-dollar network that countries could eventually shift to. But I think this will take time. I think again this will be one of those 5 to 10 year things as Bitcoin potentially moves from a $2 trillion network to a $5 or $10 trillion network. At that point, it's large enough where it's more like the size gold was 5 years ago, and then that's potentially pretty interesting at the sovereign level. So I think as the dollar has that kind of 5 to 10 year set of ongoing problems that I've talked about, like it already had over the past 5 years, I think that'll be the similar time frame where we'll see the ongoing. One, you see the diversification of currencies, so around the margins, a little bit more interested in China's currency, especially among all these kind of non-U.S. aligned BRICS type nations. And then two, you see this increased ongoing interest in gold and to a lesser extent Bitcoin. The path over the past several decades was that basically sovereigns would hold gold for the portion of their assets that they hopefully plan to never have to sell. and they would hold treasuries for the portion that is generally more liquid, that they can liquidate in a day, potentially, if they wanted to. And then, of course, there were various political reasons why they would hold more in dollars than they probably should have. And I think you could see a similar thing where sovereigns want to hold gold that they hopefully never sell, kind of like how I think many individuals should own gold that they hopefully plan to never sell and leave to their kids, and just it's kind of rainy day gold. Whereas Bitcoin is more liquid, especially because it gets larger and quicker to move around. So I certainly think on the sovereign level, you can see that kind of by monetary standard, where they hold both of them for different reasons. I wouldn't phrase it quite that thoroughly. I would say that the threat that government's going to tell you that you can't own it has decreased rapidly, especially in the United States. I think where there's still challenges are, I think there's still going to be ongoing anti-privacy rules that basically make it harder or disincentivize or sometimes outright illicit to use it in any sort of private sense. And two, I think it gets tied into that financial repression discussion I talked about before. When sovereigns have issues, they try to push the issues where they can. So I think that trying to surveil everyone's Bitcoin, making sure that they're taxing their Bitcoin, potentially in some context putting punitive taxes on people owning assets that whether it's gold, Bitcoin, foreign stocks, extra housing, whatever the case may be. There could be kind of buckets of investments that the government declares are desirable and that they view as contributing to the nation, and other ones that they view as more negative investments they could put punitive tax levels on, which is different than saying you can't outright own it, but you just kind of layer on these frictions that are easier to kind of sell to the public. So I wouldn't say we're totally out of the woods in terms of government action against Bitcoin and related assets. But I think that some of the tail risks are mostly off the table, at least as far as like an investable probability analysis. And instead, it's more about how else can they poke it whenever they have an issue. And I think with the fiscal backdrop, they're going to continue to have an issue. So when I did interviews earlier this year, I said my base case was that they would ring fence their existing coins, but probably not accumulate too much more. So far, that's the track we're seeing. They legally separated, their coins. They don't want to sell them anymore. They also put Bitcoin and other cryptos in different buckets, so they can sell other cryptos while they're not supposed to sell their own Bitcoin. So one of the budget neutral things they can do is sell other cryptos and use the proceeds to buy Bitcoin. That's one option. The ongoing confiscation of any sort of digital asset for any number of reasons could also be sold and used to buy more Bitcoin, or if it is Bitcoin, added to the reserve. So those are potential options. There are potential gold revaluation options, or similar kind of quote unquote budget neutral things that can be done to add some Bitcoin. I would expect to be pretty muted. They could surprise to the upside, certainly, but I wouldn't really base my investment decision on it. I would say that I'm bullish on Bitcoin without the U.S. government buying any more. And if they do happen to buy more, that would just add to the thesis. There are other things they can do to kind of add to quality of life of Bitcoiners. They can, for example, and this is some politicians have been focusing on this, which is to make it so that under a certain threshold, certain Bitcoin transactions are not taxed. Right now, if you buy coffee with Bitcoin using the Light Network, for example, that's a taxable event technically. And there are ways that can just make that easier. That allows more payment innovation without worrying about de minimis types of taxes, which I think would be healthy. That basically allows the citizens to use Bitcoin more rather than just stash it on the sovereign level. They can also potentially, strengthen their stance on privacy. So far, I think we've seen a little bit less anti-privacy action in this administration compared to the prior one, but there have been ongoing kind of legally troubling cases around privacy, even non-custodial privacy services. And so that's other things that I think are maybe not talked about enough when everyone's kind of focusing on the reserve. So I continue to expect neutral to slightly up on Bitcoin reserve. And then depending on what happens with the next administration, depending on next election outcome, I wouldn't particularly expect a Democratic president to add to it. Potentially could even reverse some of it, could go back to selling it, because that's only been done by executive order. That hasn't been, congressional law. So they would have it in their right to liquidate it on day one if they really wanted to. So that is potentially as ephemeral as other types of Bitcoin buyers.
Bitcoin, however, offers a new dimension. Currently about 1/10 the size of the gold market, it's not yet large or liquid enough for major countries to adopt in significant quantities. But as its market capitalization grows, Alden believes it will become a serious contender.